Okay, thank you, Raleigh, and I'd like to welcome everybody to the Trading Pub's first annual Trade-A-Thon, and I'm privileged to be the leadoff for today's presentation. What I'd like to do here is today's topic is going to be daily trading preparation, our routine, and some of our trade setups that we look for throughout the course of the day. What I'd like to do is begin with the disclaimers that are required. CFTC Rule 441, trading in futures and options on futures is speculative in nature, and past performance is not necessarily indicative of future results. Any reference in today's video to performance is hypothetical in nature, and so we want to get right into the presentation here. I'd like to tell you a little bit about who I am. I see some familiar names in the list today, and I welcome them, and I welcome all the new folks around the world. If you don't know who I am, I'm a 30-year trading veteran of the investment banks and various hedge funds, as Raleigh pointed out at the beginning. Shearson Lehman Brothers, United Bank Switzerland, and a variety of various high-frequency style hedge funds. During my tenure at the investment banks, I was a market maker primarily in listed NASDAQ stocks. I also traded index futures and various derivative products. And being in a global investment bank provided me a wide array and experience of trading various products throughout the spectrum of the markets. So with that 30-year trading experience, having left the investment banks back in 2004, so that's a full 10 years ago, during that time I've traded for a few hedge funds, and in 2008 when the financial crisis hit the markets, the hedge funds that I was working at were simply closed because they had redemptions. So since 2008, I've been simply trading for my personal account, as well as developing some educational products. And this past year, 2014, we started Polaris Trading Group, and it's simply designed, Polaris Trading Group is designed to bring my 30 years of experience to the novice trader, to the average retail trader. Again, those are loose classifications. We want to bring my knowledge and experience to help the average trader compete on the level of the large institutional accounts. So with that, I want to just describe my mission for our members. And it's a four-pronged mission, but there are subcategories to each of these categories. First, and again, not necessarily in order. You can think of them as a holistic view of my mission. One is I want to help our members improve decision-making skills. And again, every day we have to make on-the-fly decisions based upon our trade plans. If you have a trade plan, and in the heat of battle, in a sense, with the markets moving very quickly, we need to make sure our decision-making skills are solid. The investment banks spend a lot of time and effort and energy teaching their employees, their traders, that decision-making skills, because as a market maker, I simply had to make decisions constantly throughout the course of the day, and being hesitant on making decisions proved typically that we would end up having a loss. So it's really critical that we develop our decision-making skills. Next level here, onto the right-hand side, we want to learn new empowering trading habits. All of us have some sort of bad habits that we tend to repeat. So my mission is to help learn new empowering habits and disempower those self-limiting beliefs and self-limiting habits that prevent us from truly succeeding and where we want to reach our goals. The third category here down the bottom is simply classified as demystify price action. There are many out there that believe that the markets are manipulated, that the big investment banks are controlling everything. And to some extent, you know, they speak about the Fed, you know, with the monetary policy and so forth. Well, to a small degree, I suppose there's a tidbit of truth into, you know, that manipulation viewpoint. But for the most part, most investment banks and investors and big money managers, they're out there trading their plan, their investment style. They're not worried about the other guy. They're not worried about whether high-frequency traders are, you know, pushing price around. Okay, in the scheme of things, all that really doesn't matter. If what matters is price direction and performance and returns. So what we try to do is we try to, you know, take the veil away from all that, you know, mysterious action that supposedly takes place. Having worked at the investment banks, I can assure you that, you know, as a market maker, I was one of just millions of other traders out there, you know, trying to profit from the market's pricing mechanism. Okay, we were not, you know, directing price. You know, it's simply supply and demand at the end of the day. And the last thing, a category is just to become a more informed trader. People classify traders as, you know, novice, retail, professional, those type of categories. I simply categorize traders as the informed group, which is typically that 5%, and that the uninformed group, which is everybody else, the 95%, those that typically lose, as the statistics have shown. So with that, this is my core mission for our members. Okay, so moving into the daily topic today is, what is my daily routine? What is a professional trader's daily routine? How do I prepare for the day? How do I help our members here at Polaris Trading Group prepare for the day? My question to you is, you may have a trading plan. Do you have a daily trading plan? It's really important to prepare every morning for the daily session. Whether it's simply looking at news in the overnight, looking at prior daily charts to see where key reference points are for the day, what was the daily high, low, what was the midpoint, those type of metrics. But in any case, you should not be coming to the trading game, sitting down in front of your computer, turning on the screen and saying, okay, I'm going to buy them, I'm going to sell them, without having some sort of plan. When I was at the investment banks, we were required to create a daily briefing for the sector subgroups, you know, that we were focused on. So when I was at the investment banks, my primary group that I was focused on was biotechnology and healthcare. And so each and every morning I had to prepare a daily briefing that was disseminated to the big institutional accounts. And within the context of that briefing were actionable items, any news events that may affect the individual stocks that we were trading, and making sure that the big institutional accounts are aware of that information. So with that, what we do here for our members is, I think the best way to begin to prepare is simply write out a short paragraph of what you think the key levels have been during this past week, the past day or two. Okay, what was the overnight action? Taking a look at the overnight action. And then just sitting down and saying, okay, well, if this happens first, if this event happens first, what is the more likely scenario to say to the upside? If the market sells down, what is the more likely scenario to the downside? And of course, I know many of you out there use techniques using Fibonacci's and average true ranges and so forth. Whatever tools that you use, you really should sit down and write out something each morning to yourself. Okay, so that what we call our daily trade strategy briefing, and I'm going to show you a copy of today's that I wrote. I write one every single day for our members, and that's part of our key part of our preparation daily routine. And by writing that out, very similarly to the style that I wrote when I was at the investment banks, provides our members an outline of today. It's not predictive. I'm not trying to make, hey, this is going to happen today, and you know, be the smart guru. What we're trying to do is prepare that if an event happens first, what is the more likely upside targets and so forth. So I'm going to show you a copy of that very shortly. But during that preparation, we look at, you know, the economic calendar. And the economic calendar is just simply, you know, do we have like yesterday we had the FOMC meeting. Tomorrow coming up we have the non-farm payrolls. All right, the important economic reports. You need to know those. It doesn't necessarily mean we trade those, but we need to be aware of them. We need to be mindful of key events that could affect, you know, market price. All right, and then what we do at 9:15 each morning is we all join up in our trading room for a pre-market briefing. So once the daily trade strategy report goes out, everybody gets an opportunity to review that. And then we all get together before the cash market opening. All right, and we will we'll discuss what the opening range strategy, okay, will be. And then I'll show you an example of our opening range strategy. So what we're doing here is we're going step by step. It's a very methodical approach. All right, and then as the day unfolds. All right, one of the key questions that we want to always be asking is, what type of day structure is unfolding? Many of you are familiar with market profile and the concept of various day structures, but simply what we're looking to say is this developing as a trend day or is it developing as a range day? And the reason that is important is because it'll determine what type of trade strategy that we're going to employ that day. We have actually a non-trend or a range day trade strategy, and then we have a trend day trade strategy. So we need to get an early look as possible on what type of day this is unfolding as. Okay? Now, before we get to some of our trade setups, I want to give you a little bit deeper insight into our daily trade strategy briefing that we send out. Okay, so let me just change the slides here. Okay. Okay. Okay, here we go. Now, as I mentioned, we always want to take a look at the economic calendar. And we want to know what's on tap for today. So here is the U.S. calendar, and I simply pull this off from econoday.com. All right, it's a very comprehensive economic calendar. So today's highlighted. I believe we have jobless claims today at 8:30 coming up in the United States here, and again tomorrow's the big non-farm payrolls number. For those of you that globally, there is a global calendar. Okay, so this is free information on the web, and it's simply econoday.com. So that's a good start to find out what are the key economic reports that may affect, you know, the type of trading that you're doing. Many of you are perhaps, you know, forex traders, okay, and currency traders. So it's important that you certainly understand, what various reports will affect, all right, the instruments that you're trading. All right, and I'm sure many of you know this already, but again, what you want to be doing here is we speak about a daily routine. Okay, so step by step by step, we're looking to make sure that we're you know, we have the proper information in order to make the decisions. Now, I'm going to bring you over to our website page, and this is where, in the blog posts, and this is where we post our daily trade strategy. Now, it is sent out each morning to our members via email, and at Eastern Time, it is then uploaded and archived to the blog. What I've done here for everybody today is post it early so we can all take a look at what we wrote today. But if you were to go to the website, just simply PolarisTradingGroup.com, and then click on the blog title, you'll be able to see all the past archived blog posts. So let's take a look at today's. And simply what we're actually doing today is a pre-market briefing for today's action. Okay, so what I usually write here is a little missive about perhaps what happened yesterday, how prices and everything unfolded, and then ultimately what we're looking for today's session. So this is, again, similar to how I wrote when I was at the investment banks. And this is what I was saying. If you have not written anything out for yourself, if you just sit down at the computer, you're doing yourself a disservice. So it may be, the new year beginning, and this may be something that you want to consider doing for yourself going forward. Again, it does not have to be technical. Okay, it does not, it's not written with the idea of I'm trying to be right. Okay, I've written this in a style that more from a inferential probability standpoint, meaning that if a certain event occurs first, as I said earlier, what does that imply? All right, to the upside. So we take a look at what we call a 3-day cycle, and simply a 3-day cycle, the market kind of breathes and expands, right? It rallies and then it pulls back, right? The 3-day cycle is actually a topic for an entire webinar, but the brief cliff notes here on the 3-day cycle is simply that since the market has a bullish bias, right? Again, there are periods where the market will correct severely down, as we've recently seen the past few days, but typically the market retreats and then rallies back. So there is a bullish bias underneath the surface of the market. So the 3-day cycle typically goes where cycle day 1, which is, by the way, today, cycle day 1 is designed to look for a secure low. And the secure low is a low from which the market has enough confidence in where the market will rally, okay, for the next 2 days. And then the cycle, unfolds. So many times on cycle day 1, we see some weakness. Now, again, this morning pre-opening, we have some residual strength from yesterday's final day of the cycle, which is cycle day 3. So there's some residual strength there. Today, we will be anticipating some sort of weakness today. And again, this is designed to give us a guideline of how the markets may unfold, not that they will unfold. But if they do, I know that the odds favor at least a 10%, or excuse me, a 10-handle decline, right, sometime during the day, and those odds are about 71%. And then if there's further weakness, the odds decrease dramatically all the way down to 41% that the market will retreat 20 handles. Okay, so we use this as a guide. All right, and so what I go forward with each and every day, I kind of, it's cycle day 1, cycle day 2, cycle day 3. So I lay out, odds of in the high ranges and the low ranges for the day. I create two hypotheses. Again, this is all part of our daily trade routine and preparation. Scenario one simply is an upside hypothesis where if price, in this case today, if price clears and converts the prior day high, which was at 2023.75, then there's a 50% chance, and again, we handicap some of these targets, there's a 50% chance that the price hits 2037. We've already achieved that. We've hit 2041 on the high of the overnight so far. If the momentum remains strong, which it appears to be at this moment, then the upside target measures 45.75. Okay? That's an upside target. Now, on the flip side, we say, well, price has already cleared the 23.75s. If in the pit session, 2037 becomes some sort of resistance, okay, and then it cannot continue to advance from that level, we would be expecting some sort of a decline today off these higher pre-market opening levels, okay? And again, we go forward and say the scenario two, and we present some downside targets in the event that the market pulls back. So this way, all right, we're looking for upside opportunity, and if certain events occur, so the event would be price has cleared the prior day's session high. Okay, so actually in the pit session opening right now as it stands, we're looking for a pretty good solid gap opening. And so what does that mean for everybody? What does that mean for our traders? What does that mean for our trade plan for the day? Okay, so this is where we begin, and then our simple trade strategy every day is we have some trade setups that we're going to speak about, and I'm going to show some examples of shortly. And simply they're called bull and bear stackers and premium and discounts. And simply we want to be, the main core strategy is to remain in alignment with the underlying strength of the market. So if the bulls are in control, we're simply buyers on pullbacks. I mean, we're basically trend or directional traders. We're not fade traders. All right, I'm not trying to, counter trend trade something. When you're trading futures, I mean, this is high octane, okay? And so it really is in your best interest to trade along with the dominant force, whatever that may be. Now, tomorrow we could be down 20, 30, 40, 50 handles, right? Who knows? We may be down that later today. But we're not trying to guess what the market's going to do. Rather, we're just going to continue to trade in the moment with the flow, with the probabilities simply on our side. Okay, so what we'll do here, let me go back to the next slide. Okay, and we're just going to discuss here for the next 30 minutes or 40 minutes or so some of our trade strategies that we look for throughout the course of the day. All right, and now this is, again, this continues the sequence of what we're talking about. So once we complete the pre-market briefing and the market opens, the pit session opens, all right, we look for our opening range. We have an opening range strategy. And in this particular case, we look for one key price marker. So when I was a market maker, in this particular strategy, as a market maker, I employed on a day-to-day basis. So, and we're going to show an example of this in some of the charts momentarily. When the market opens, there's what we call a 5-minute period where there's an opening rotation. Right? There's an opening price, and then the market moves higher, moves lower. And within the context of that first 5 minutes, we take the average or the midpoint of the first 5-minute range, and that's what we call the opening range rotation and the midpoint of that. So that's the key price marker. That becomes a anchor price, if you will, for the day. All right, and we're going to show an example of that very shortly. As the day unfolds, again, we're looking for, is it the day type of a trending day developing? Do we have a range day developing? So, for instance, today we have a gap. The expectation is for a fairly strong gap opening. What we're going to be looking for today in the pit session is how does price react relative to that opening range price? Does it hold above it? All right, that becomes our first key sentiment indicator, and that will determine whether or not we begin to continue to stay on the buy side or look to sell any bounces. All right. As the day unfolds, we look for another category which is our core strategy, called our premium and discounts. And this is based upon a CCI crossover system. Now, the commodity channel index has been around for a long, long time, and but we have developed it in a very proprietary way that if you were to look up the CCI and look examples of how it was originally designed to use, we don't use it in that fashion. But we do use it as a trend or a non-trend indicator. I simply kind of refer to the CCI as our all-terrain vehicle, our Humvee. And it is very useful in trending and non-trending condition. We use a dual CCI configuration. The next category we'll show you is what we call our stacker. So if you think about the casinos where everybody says, oh, the casinos stack the deck, okay? Well, that's where this term comes from in identifying a trend shift. The idea here is we want to put the odds in our favor. All right, we want to stack those odds in our favor, and we're going to show a very unique way of identifying when there is a valid trend shift. All right, everybody is seeking the they want to get on the trend as early as possible. All right. Problem is identification of a valid trend shift. All right. We have tools that we've developed that very effectively identify that trend shift. So it allows us to be able to verify that new price strength or new price weakness is actually a valid shift. And then allows us to make the necessary adjustments in our trading style, in our orders, to get in alignment with that. And again, the problem with a lot of traders out there is they trade their beliefs and they trade their biases. And so if the market has been down, in most recent memory, any bounces, a lot of people are still going to say, oh, I'm going to short that bounce, I'm going to short that bounce. And what happens is they end up shorting the bounce, but if it's a true trend shift, that short never comes in for sale any longer. And then they end up having to chase and cover at higher prices. So what we want to do is we want to identify when a trend shift is truly valid. All right, and we have a very effective way to do that, and we'll show you. All our trade strategies has strict criteria. All right, must begin from a key price zone. There has to be some sort of a pattern. Now, again, we're all pattern traders, but we have some specific patterns we look for. And then ultimately, what pays us is once there is a shift and the momentum picks up, right, and the trend gets underway, that's where we end up getting paid. So it's simply price, pattern, momentum. And in each of our trade setups, we have a solid 4 qualities, and these 4 qualities are embedded in each of our setups. 1, have to be clearly identifiable, pattern recognition. 2, repeatable, all time frames, all right, from various charts. Quantifiable in risk and measurable in profit potential. And we were talking about earlier at the outset of one of my missions for our members is that to become better decision makers. We have developed and adapted a technique called the OTA loop. And simply that stands for observation, which is simply price action, Orientation, right? What's the correct side of the market should we be trading from? Right? Is there a trend shift? Well, if there's a bullish trend shift, then I want to observe that. I want to recognize that. I want to orientate myself now to the buy side. So we want to stay on the correct side of the market action. Once we're there, once we've observed and orientated ourselves, we want to look for our trade setups that are in agreement with our methodology, which will help get us into a trade with the lowest possible risk profile with potential reward. So that's the decision cycle which we look for. Well, if this happens, then I'm going to take a trade. And of course, the last part of the decision maker is simply taking the trade. Execute the trade and then manage it accordingly, according to the rules. Okay? So with the last 30 minutes or so that we have, and I'd like to leave a little bit of time for questions, is let's get right into some of the charts. Now, many of you are familiar with using market profile. This is one of our core charts that we do indeed use. And what we simply look for is, we're looking at the high volume areas and the low volume areas just to get an understanding of where the big market participants are, where the heavy volume has occurred, where the light volume has occurred. Again, it's not predictive. This is all for planning purposes. Okay, so we need to get a, as an intraday trader, which I'm assuming most of us are in here, as an intraday trader, have a view of the bigger picture. What happened, prices, as you can see here, have pulled all the way down the past couple of days, all the way down back into the mid part of December. Well, we need to know what happened in December. There was a lot of activity, a lot of crossover, a lot of volume. So the prices pushed down to the point where they finally found responsive buyers. And then all the sellers ultimately got absorbed. Right? The cumulative delta bars down here, it's something very interesting that we use. It's a way of gauging, participation, volume participation. Into the close of the year, into the holiday, okay, volumes become lighter anyways because vacations and so forth. But what was very, very telling here was that the cumulative delta, which is the net volume buying and selling, actually decreased dramatically and actually turned negative during the holiday period. And a lot of people were expecting that Santa Claus rally beyond Christmas time, and the market internal simply did not support that view. And then, ultimately we all know what happened. So again, this is part of our planning stages, okay, of what we do on a day-to-day basis. And each and every morning in our trading room, we do touch upon the market profile. So I know many of you out there are familiar with that. So that's, again, just simply part of what we do in terms of planning. Now the next slide here is what we call our Target Master Stat X Zone. It's a 60-minute chart, and we use this as part of our interpretation of where prices may go. So for instance, in the daily trade strategy today, and this is actually a snapshot of today's early morning action, is that in the overnight, prices went up to what we call a breakout level 137.25, which is pretty much currently where we stand right now. All right, and there's a little bit of an overshoot there. So the idea here is that's our first initial target zone. Okay, so right now we've achieved that target zone. And so the expectation now coming into the day session would be if this 37.25 level or zone that we currently are in fails to elicit additional buyers, okay, there's a good chance, all right, that prices will pull back down to the prior day's high at the 23 handle. Then at that point, we make a new decision. We look for new price action, responsive buyers, and if there's a failure of responsive buyers to come in, if there's a test of the prior session's high, then prices may rotate back down to the center of this high volume area that we've experienced the past couple of days. Okay, so Again, all our members have, that have the software, all have this particular chart, and we reference it in the morning. Okay, so it is a very helpful planning chart. Now we talked about the opening range. Is our first indication of price weakness, price strength. What is the sentiment for the day as it's unfolding? And so here's an example of our opening range strategy with price built into our software for everyone. And that cyan colored line there is the 5-minute opening range average. And so, as we all know, the market gaps up and gaps down, each and every day. And again, we're expecting a gap up today. So the question is, and this was taken into the end of the year here, about 12:30, 12:31, only about a week ago. And what we want to see is, in this particular case, on the left-hand side, price opened with a gap down, and then it created our 5-minute sentiment line. All right, if you want to call it a dynamic bull-bear line, okay, that's another way of viewing it. And prices tried to rally back, and as you can see here on the left-hand side, price was only able to rally back to the 5-minute opening range average, and then failed to get any successive moves above that. So this actually became an active sell signal for us. All right, live that day. And we use this on a day-to-day basis, so we're not trying to guess whether or not the market, the gap's going to get filled or not. We simply want to know and identify what the market is doing relative to key price levels. So as I mentioned, price pattern momentum. There's a key price level, and there are multiple key price levels that we reference throughout the day. And again, as a moderator and guide, trading guide for our membership, we constantly are updating what the most key important price levels, dynamic price levels are throughout the course of the day. So all our members are actively engaged in what we're looking for to do as the day unfolds. And then we have some automatic targets that are placed once that 5-minute opening range average line is established, and we simply paint them out: target 1, target 2, target 3. And here you can see on the December 30th that failure to exceed that prior 5-minute high, the opening range average, led to further decline, and ultimately hitting our target points for the day. So again, that 5-minute is really a key factor in what we do on a day-to-day basis. Okay. The subsequent following day, again, there was still weakness there into the close. And again, as I mentioned on that profile chart we saw just a few minutes ago, that there was some negative delta. So there was weakness, into the end of the year. And as we all know, for those that traded that last day in December, it was a pretty significant down day. So on that last day of December, prices again opened up, tried to give a little bit of a rally attempt, all right, but actually failed pretty much at the same prior day's 5-minute opening range average. Again, that still becomes a key reference point for us. Failure to get back above that, and then subsequent move back below the 5-minute average, as you can see here, ultimately again led to further weakness. And again, this type of trade action all is part of what we're looking for, and we actually say, well, we're looking for shorts here today. There's no longs, no buying, only shorts. And once price breaks key price points, all right, we actively enter a trade. And then of course we measure our potential targets already up on the screen for us. Here 73, 70, 67s, and on the 31st, again, as you can see, not only did it hit the opening range targets, but it even went much, much lower. Okay, so these are just the initial targets measured from the opening range average. So moving forward, with some of our other trade setups that we look for, okay? And again, all these trade setups, by the way, if you are primarily we trade the S&P and crude oil. Those are our two core instruments that we trade in our membership. All of our trade setups that we're looking at today and discussing can be used, the methodology can be used for Forex futures, all right, currency futures, gold, okay, individual stocks, all right, all various instruments. All right, so the methodology is applicable, across the spectrum. Because simply price action is price action, and that's really what we trade. Okay, we trade price action, and price action unfolds very similarly. It does not matter whether you're trading, currency futures, various commodities or individual stocks. Okay, so I just want to make sure, for that. I do not particularly trade the Forex futures myself, all right, but you can use a 5-minute opening range from the, what is it? Is it the London opening? Okay, I believe you can use that, all right, for the opening range. All right, it's a little bit more difficult with continuous, contracts. All right, but we do want to use, like a starting point. All right, and again, the 5-minute opening range average is simply a starting point for us. So here, this is one of our first a bull stacker, and then as I mentioned earlier, the bull stacker is a trend identification shift. Okay, the components of our bull stacker, and we'll see an example of a bear stacker as well. Simply the components here is we have a proprietary ATR line. Now, the average true range we use in a very big way, but we use it in a very proprietary way. Most ATR lines for everybody is typically a stop trailing type line. We use it as what we call a point break shift. Okay, so simply what we look for is that if there is enough energy in price, so you can see the prior trend was down. If there is enough energy in price, all right, and again we're measuring the underlying energy and volume that is on upticks versus downticks, all right, and how far if there is volume on an uptick, how far the algorithm kind of goes that how far can price be pushed on the amount of volume that is entering into the price. Okay, if there's a lot of volume but there's very small range, well, there's not a lot of energy yet to move price, to expand price. So we're constantly measuring the dynamics between price and volume underneath the surface. Okay, there are other programs out there that actually they try to identify the price volume. We do that, but it's all embedded in the algorithm. Okay, so what we're simply trying to do is watch for the price action, and we say if price can exceed the prior ATR line, and in this case it has, and exceed it by a certain amount, okay, which in this example it has, then that constitutes a valid, significant event, all right, what we call a point break. And then at this point, our decision is done for us. Okay, we're trading from the long side. Now, again, as I mentioned, there still are a lot of traders that will short these bounces in anticipation of another move back down. Well, in this case, this is a bull stacker, and we're stacking the deck in our favor, just like the casinos do, right? We want to be the house. Okay, we don't want to be the player. We want to be the house. And so this bull stacker formation tells us that prices are more likely now from a probabilistic standpoint of moving higher because there's enough energy. And again, using our proprietary indicators here measures that type of energy. So as you can see here, the move up and then the subsequent pullback, okay, the X marks the spot typically where we would enter the trade. All right, we're not tick traders. We're looking for directional moves. Okay, so we're not trying to trade for 3, 4, 5 ticks. Rather, we're positioning ourselves for the next move that could potentially take 3 handles, 5 handles, 8 handles, whatever the market will wants to do for us. Okay, the entry technique that we use, and we're pretty open about discussing this, is what we call our right side pivot rule. All right, and we have details in our education that shows that, but visually you can see where those X's are, that's the right side pivot rule. And now the ATR stop line is simply used for a trailing stop management. So not only do we have entry techniques and identification of a trend shift, we have a built-in management technique. So it is a full, complete methodology. All right, this is not patchwork methodology. This is step by step by step. All right, I'm going to show you in the next slide example of a bear stacker. All right, and as you can visualize, it's actually the exact opposite. Okay, and the structure of it forms a very consistent pattern. Simply higher highs and higher lows on the prior move, trend up or directional move up, followed by a break of that ATR. Again, that break of the ATR where I have circled there constitutes a significant event. Okay? And with that significant event, then that is what we refer to again as that point break. We're looking then to take shorts. All right? And the entry technique, no different, right side pivot rule, and then we work to work that trade as far as we can. Again, sometimes the market is very good to us, right? As it has been recently. Sometimes it will chop around a little bit. Again, not all our trades, everyone, are winners. Okay, I can assure you of that. But at the same time, our losers, when they do lose, are very small. And when we have the opportunity, as this particular example showed, and again, these are all live trades that we have taken in the past with our members. And on our website, if you go to the Twitter page, which is on the front page, we have over 1,200 snapshots of live trades that we have taken throughout the past few years. Okay. Now, this particular chart is a 750 tick chart. This is one of our execution charts rather than a 5-minute chart. Okay. So our execution charts that we use specifically on the S&P is a 750 tick, and then we use a 1,500 tick for a larger time period, if you will. Okay. So again, all the details of our trade setups are embedded in our in our daily education, and we go over these each and every day live. The next category that I mentioned was our premium and discounts. Now, once there is a shift in the market dynamics, so here's a shift from a bearish to a bullish market dynamic, and prices are now the ATR line, which is the white line, okay, is trailing now behind price. So now we know that we're trading from the long side only. We want to get in as early as we possibly can, using that bull stacker type formation, and that occurred a little bit earlier in this particular graph. As the market is continually moving directionally, we're looking for now simply pullbacks within the context of an uptrend. This is not a unique idea, all right? The Globex we use, as a matter of fact, this is a 24-hour chart. So a Globex we use a 750 on an ES mini or a 1500 tick. Those are the core that we use on S&P. NASDAQ, crude oil. So for instance, crude oil, if you trade crude oil, we use a 300 and a 900 volume chart. All right, we prefer volume charts using crude oil. So, but no matter what chart you use, the concepts that we discuss here are actually the exact same. All right, and if we have a few minutes before the end of it, we want to get to some. We trade NASDAQ, we trade Russell, YM. These are our members that trade them. I don't particularly trade them all, but our membership trades all the E-minis and crude oil primarily. All right, We don't trade bonds, although the method works for bonds if it was to apply to bonds. We don't trade the metals. Okay, we do have some folks that trade the grains. Okay, tick chart, I believe we use a 500 tick chart. The Russell, we actually use a volume chart, and we use a 300 volume chart on the Russell. Okay, natty gas we trade. Okay, works the same way. All right, we have again crude oil and natural gas traders. But again, the concepts here, all right, will unfold very similarly on any instrument. Okay, so just keep that in mind. It is, you know, this is not specific to the S&P. All right, this is a methodology that is applicable across instruments. Okay, so in the course of a discount, what we're really looking for is, you know, everybody knows the idea of, hey, I want to buy a pullback within an uptrend, right? Okay, well, that pullback within an uptrend, the problem is, when do I buy that pullback? At what point do I buy that pullback? And that becomes the key question, right? We don't want to buy it too early, but yet we want to get on, you know, at the proper time. We're not trying to get the very low tick, but we're trying to identify when a pullback within the context of a trending condition has run its course, and now it's ready to move back in the primary condition and direction. So a discount signal is a statistical signal that gives us a buy setup within the context of an uptrend. Okay, and again, this is all based upon the CCI and our proprietary settings that we use, and the signals fire right on the chart live, and they give us a text message right on the chart that says DISC for discount 2065.75, and that is the alert bar and tells us that that price or higher we can look to enter. So I put some notations here of where we would have gotten in at 0.1, and then we can manage and scale out at 0.2 and 0.3. This is a typical example of what we do in our trading room. Okay, the stars that signal strong momentum, this is what we call our 200 extreme. Again, we talk about, you can see here this red line. All right, that was a prior bearish ATR line. Notice that the stars signifies strong momentum, all right, underneath the surface. Again, price volume momentum, and it exceeded that that prior bearish ATR line with strong identifying momentum. So this told us that this move, as it's developing, right there where the stars are signaling, this move has potential to move much, much higher. Okay, so there's an example of how we identify that price volume activity to give us the necessary information that we need to say, well, is this a false move or is this a valid move? All right, and so that is one of the ways that we identify that. The premium, which is the next slide here, the premium simply is the reverse. Okay, it is we have a downtrending condition. Okay, we have a downtrending condition, and we're looking for a pullback. And so this pullback that occurs, all right, we simply, it is again our CCI indicator. And if you look at the indicator here, the white line, which is our trigger line, gets up above the 100 line, and it fires a whole bunch of series of dots. And those dots are telling us that it is a now valid opportunity, right, statistically significant, to look to take a short trade. So the entry points are very straightforward, very simple. Once we have these alerts, and again, these arrows that are showing on the chart are live. They're not after the fact, all right, like many programs out there are that show after the fact trades. These are very live. Okay, and so with the alert bars and the live, and there's not only, there's a visual and an audible. As a matter of fact, while I'm here, let me pull in, all right, one of our pieces of software that we use, and we call this our Scanalyzer. And this particular piece of software is brand new. We just finished developing it at the end of the year, And this simply scans all our instruments that we're interested in trading. It scans for the current trend condition, if there's an ATR point break, and again, our bull and bear stacker formations, premium discounts, and the extreme conditions that we've highlighted with those stars. Okay, so this particular piece of software, the algorithm, does all the heavy lifting for us. All right, the strategy works well in a trading range. We had some activity yesterday in a trading range, worked really well. That's why it's important for us to identify a trend day versus a a non-trend day, okay, as early as possible, so we can employ aspects of our strategy, okay, that will be in congruency with what is, how the market's unfolding, okay. Again, our goal here is to always be in alignment with the dominant force, okay. So as you can see here, the various chart types that we use here is, on the YM, somebody asked about the YM earlier, we use 144 tick. The Russell 400 volume, some people use a 300 volume, 500 tick on NASDAQ, a 900 on crude oil and so forth, 1500 and 750 on ES. So this particular piece of software is actively running in the background. All right, it gives us all the information that we need, gives us our signal, gives us an audible and visual alert, so we can scan a multitude of contracts, all right, throughout the course of the day, and just simply let the computer do the heavy lifting and looking for the trade setups that we look for. So just to conclude this, because I think I want to just kind of, before we conclude here, I want to get to some of the live charts. And again, on this premium, we're looking for a pullback within the context of a downtrend. The signal gives us the alerts. And again, as an example here, point 1 would have been an entry point for our members. And again, position sizing and all that is up to the individual trader based upon your account size. But once entered the trade, simply stop goes above the high, okay, where that X is, and then further management of the trade. How we would manage a trade, say for instance, as an example, you entered 2 contracts short at X price, and you put a 2-point stop. Okay, so that would be a typical example. What we would look for is a move below our entry price, equivalent to 2 points, and we'd buy 1 back. All right, taking half of the position off. That gets us to a risk-free position, and everybody out there in the world, we all want to be in risk-free positions. Once we're in a risk-free positions, the anxiety, everything that kind of pumps through our veins as we're in an open position kind of relaxes on us. The risk is off the table. I can't lose any money. All right, that's the position we want to be in. Now what we become, once we're in a risk-free position, we become managers. Okay, we manage the balance of the position. Okay, well, again, we're not shooting for the lowest price or the highest price. We're looking for a good entry price based upon structure. We're looking to get risk-free so we can then manage. If the market has potential to move directionally, we can then manage the balance of our position. And again, as I suggested earlier, using the ATR stop line. All right, and again, since that is a structural line for us, all right, prices will continue directionally until that ATR line is broken. So in an example here would be the entry, risk-free, and then manage that line until at some lower level price strength comes in and eventually stops you out at that ATR line. So that is a particular way of managing these trades. Okay, so it's 9 o'clock. We have about 15 minutes left. All right, we can just take a quick look at the opening trades that are currently open right now on our screens, and then I can take some questions here. And then I want to give everybody an offer, all right, for some special for your attendance today. But let's take a look at the live charts here, okay, for a moment. Let me just change the screen. Okay. So now we're looking at a live chart today, this morning. And this is a 1500 tick chart. All right, and just to show you some of the components that we've spoken about on our static charts is, as you can see here, we have an uptrend. So we have the ATR line, which is based upon a 750, and we're able to overlay a 1500 ATR line, and the yellow or goldish color line here is a 4500 ATR line. So right now the price condition is bullish, and as you can see here, the signals that gave us live this morning, very early in the morning, again I was sound asleep, but for those that are trading globally, there was a discount signal here, there was a discount signal here, and again, as you can see, prices moved higher. So those were two successful trades this morning for the Globex overnight traders. Currently, right now, as we are coming into the opening in the next half hour or so, we have a series of discount signals right now, alerts, but they have not triggered. Okay, and again, one of the key components of our trigger is simply the alert bar high. Okay, needs to be exceeded. All right, that's one of the filters. We have a few other filters, but that's one of the filters, all right, for the criteria for the various discounts and premium setups that we have. Okay, so this is currently where we got in S&P. So we'll be beginning the day with a bullish bias. All right, again, assuming this stays pretty much the way it looks currently. And what we'll be looking to do is we'll be looking right now if there's any further pullback into the 32 level, 2032. Again, we'll be looking to buy a pullback there. Again, always with a valid trade setup. Okay, and we'll evaluate it if price gets to that point. So we're very active management, very active in our trade decision and observation. All right, let's take a look at crude oil, because I know a lot of you like trading crude oil. Crude oil is not showing us actually a whole lot right at the moment. Okay, but I will scroll back here to give you some historical signals, all right, of what happened yesterday. All right, since the crude oil is not really showing us a whole lot early this morning. Right. Here's an example, and again, for those of you that trade crude oil, certainly know it moves quite a bit. Okay, but here's an example where price strengthened. Okay, and you can see that series of stars, and again, those stars indicate a strong momentum, price volume momentum move. All right. Price had exceeded the prior bearish ATR structure line, and then subsequently have pulled back. So this constituted a valid price shift in here. Okay, so the idea then would be on the pullback, look to buy once it completed its corrective move down. All right, as price began to move back to the upside, okay, we would then simply take a long trade, okay, with a subsequent stop below the low. Okay, and again, it's really hard to determine what stops will be. Again, I believe most of our members trading crude oil use about a 20-cent stop, all right, per contract. And really stop values are a function of the average true range of the contract, and in this case we would be measuring the average true range based upon a 900 volume chart, and we would take simply ratio of the average true range. But most right now, I believe, are using about a 20-cent stop. And again, that's reasonable when you think of the range that crude oil goes through on a day-to-day basis. Okay, so that would be our what we call our first pullback, or our ATR trade setup. Okay, so that's our first pullback. As you can see here, subsequent, we got a pullback here into this shaded zone, and we call that our fair value zone. And that, again, that white arrow right there is a discount alert. And as you can simply see, the criteria would remain the same of how we would enter that. So once prices pulled back and they went and they stabilized and prices started moving back to the upside, okay, we would then use our right side pivot rule, as we discussed earlier, right, to enter the trade accordingly. I'm not sure, Raphael, what I don't trade natural gas myself, so I'm not sure what most folks are using currently in natural gas. If anybody's in the presentation that trades natty gas, they want to help answer that question, but I don't have an answer myself specifically. But it would be a function of the average true range of whatever the chart size that the trader is using. Okay. So again, these are just examples of what we have used in the past. Now, for our last about 6 or 5 minutes here that we have, one last example here is this is where price reached a high and came back and then shifted once again. Okay. Now you can notice here that we had an arrow and we had what we potential for a discount, which is again a buy within the context of an uptrend. In this particular case, this discount, okay, was what we referred to as in a weakening condition. Okay, so with a weakening condition and a discount, we would be very cautious on a weakening condition type trade. In other words, prices are coming down fairly heavily, fairly aggressive. We get a signal, but there is no further upside move to it. And then ultimately there was enough energy here, as we spoke earlier about the point breaks. Once we get a point break, all right, we want to be then cautious on the current direction. In other words, this particular trend had been up, pullback, discount, weakening condition. This would be an opportunity where we would not necessarily take a long. As a matter of fact, we may actually consider taking a short trade on a break of the discount bar low. All right, this is an advanced trade, but I wanted to kind of highlight here at the end. So we have trades both in either direction. We're constantly, flowing with the market. We want to be in agreement with the market. We're not trying to get the highs, nor are we trying to get the lows. Okay? Is your entry based upon a break of the trend line of the pullback or the CCI signal? The entry is really simply based on whether or not that signal that we get, either premium or discount, is valid. In other words, if the trend is still up, all right, and we get a discount signal, we're looking for, ideally, we would be looking for the trend continuation, and then we'd be looking for to buy it at slightly higher prices using that low of the discount as our stop point. The decision to make the trade, whether our entry is simply based upon whether the trade setup is valid or not. All right, and there is criteria within the context of the trade setup. All right, that that gives us that signal. Okay, so with the last 3 minutes that we have remaining, okay, I would like to offer everybody for your attendance, and I appreciate the time and opportunity, and your time is very important to us, and we appreciate your time taking with us today early to kick off today's Trade-A-Thon. Our special offer for your attendance today is twofold. Number one, come in and take a free trial. See what we do on a day-to-day basis. Everything that we spoke about today is a lot of information here today. Come in, see what we do. All right. You'll see live as I moderate the room throughout the session. All right. So when you have a moment, take some time. Normally, it's a 7-day free trial. We extend it to 14 days for our Trading Pub friends. Secondarily, if you decide to purchase any of our software, all right, again, there's no obligation, but if you decide to purchase any of our software, if you use the coupon code PUB, all right, you will get a 20% discount on any of our software. Okay, not just the main Trader Toolbox software, which is the comprehensive package. That in and of itself is a $500 savings off the price. But on any individual piece of software, we will using the coupon code PUB. All right, we'll definitely give you a 20% discount on that. All right, there's the URL link. All right, for the free trial, Trading Group, PolarisTradingGroup.com/free -trial, or you can just go to the website and peruse the website a little bit. All right, there's a lot of videos. There's a lot of free videos out there on the website, and of course the blog post, which contains all the daily trade strategies. All right, so you may want to review some of that in your free time. If you have any additional questions, by all means, you can reach me at david@PolarisTradingGroup.com. All right, we'd love to answer your questions. Again, there's a lot of information here today, and you know, if you're going to be participating in the other presentations throughout the course of the day, they're going to provide some great presenters coming up today, and I encourage you to view the upcoming presentations as well, because a lot of good information out there. All right. All right. So I want to thank Raleigh. I want to thank Yana at the Trading Pub for the invitation to present today. And I hope today's presentation was educational. Again, that's what we want to do here, okay, is provide some core education, some ideas that you can walk away with. Maybe, to inspire you to continue on your quest to become a competent, profitable trader. Okay, so we got it under the wire. We got about 20 seconds left today. I'm sorry that I was not able to take any questions. I was trying to field some questions throughout the presentation. But again, I hope this has been informative for you. And again, I thank Raleigh and Yana. And have a great trading day.